my fellow traders, welcome to another one. If you guys are having a very lovely day. I was just going through some things on my chat, and I just remember this very simple strategy. Someone called me early in the morning requesting for a 1 hour strategy. So I just remember this. I said, okay, let me just post it for you guys, so you guys will just sip some tea on it and just check it out. So we are going to use envelope. We are on the 1 hour chart, Euro USD. So we're going to use envelope indicator. This setting 14 period 14 shift 0 deviation 0.100 method exponential applied to close. That is the first indicator. The second one is a moving average. Period 14, shift 0, method linear weight applied to close. And the third one is going to be zigzag indicator. Period 12, deviation 5, back step 3. The zigzag indicator is going to be on default. Normally, if you open the zigzag indicator, it's on default 1253. So that is what you need. So what you do is, in the meantime, you can hide your moving average and zigzag indicator. We only need the envelope for now. So this is what your chart will look like. So the condition is you need a lower low close below the red line. So this is my expansion phase. So to be on the pullback phase, I need a lower low close below the moving average. Yes, below the red moving average. So now I have a breakout. This completes the lower low. For some of us who are very familiar with what lower low looks like, this is a lower low. So as at this point, I have my lower low below the red line. And there is this very simple way I pick my pullbacks, that there has to be a lower low break below the higher low. That is what confirms a pullback for me. So I adopt that too in this strategy. So this is where I have my highest low. That is the highest low. This is where it is. So I still have the pullback still falls under the highest low, making two things now. The what's it called? The envelope indicator confirms a pullback. Then my own personal pullback is confirmed too. I don't do anything without my pullback confirmation. That's my own personal pullback. I have a video on how I select my own personal pullbacks. So please, I'll leave a link in the description. So for some of us who are new to it, you can go there and check it. So once I have the pullback, the next thing I'll start looking for is I need a break above the blue line and a higher high close above the blue line. First, I need a lower low close below the red. Once I have that, it has to equally be a pullback by my own strategy. Then after a pullback, after a lower low below the red line, I need a higher high close above the blue line first. So once I have that one, then I will wait for a pullback to under the red line. That is anywhere from inside the, that is okay. Let's look at it like this. I need a pullback. Once I have a higher high close above the blue line, I need a pullback to that is the protected black candle before the breakout. That is, I need a higher high close above the blue line. This is the blue band. Sorry, the blue band. This is the blue band here. This is the candle that broke it before it now created a higher high. So at this point that it got broken, the last protected opposing candle, this is it. It is a strategy. I have a video on that too. I'll leave the description. I'll leave the link in the description. Sorry. So this, according to that particular strategy, which we are adopting now, the last black candle before the breakout. That is what we are selecting. So if we select that, so once we select that black candle, which is this, please look at it properly. Let me expand a bit because I want to rush this video. I don't want to take too much time on it. This is the candle, the black candle, which is my sell candle before this set of red candles that broke the high, or that broke the upper band, the blue band. The black candle before the red. My buy candle is the red candle. My sell candle is the black candle. So the last sell candle before the breakout above the blue band. That is what I'm saying. And this is the candle. So I'll put a box on it. I'll create a box on it. Let me zoom out so you can see it. So let's assume price just got here. We just had the higher high above the band. All this has not formed yet. So I'll put a box, extend it a bit to the future. So now once price comes back to that box is not the target. The box is anywhere from the box. You can have a box there, or you can have a line like this. So once price pulls back or comes back to touch anywhere starting from this box, you dive down to a lower time frame. Once you get to your lower time frame, we are on a 1 hour chart. For this, I would like to go down to a 5 minutes chart to seek a lower time frame entry confirmation. That is, once you have this higher high close, price will come back into somewhere. That price will pull back to somewhere nice before price will buy or sell. That is the normal way that it happens. So for me, I can leave a line like this, or I can put a box like this. But what I'm trying to say is, if you put a line like this, just know that anywhere from here to the end of this place, to where that place, that's the lowest point here, between this line and this place, that is where you need your candle to come. That's you need price to come back there. That is when you start seeking for a lower time frame entry. So as it is now, let's dive down to a lower time frame for our entry. So let's just, I said earlier, let's pretend price just did a higher high. So price just came to this place now. So let's go to a lower time frame to seek entry. So now we are on the lower time frame, a 5 minute chart. So this is the line I used to mark it. So probably price was just somewhere around, maybe price just touched the line we drew. That was zone, that area we wanted price to come and touch. Let's just assume price just touched the place. Okay, so now we're good. Price has touched that place. So what you do is to make your chart neat and clean, you go back to your indicators list, you hide your envelope, then you open your moving average. So now that you have your moving average, what this indicator is for is you need to be able to select a break of the lowest high. So now you start looking for a break of the lowest high. So this is according to the moving average. You are not picking anything yourself. This is a high. Look at the cursor movement. This is a high according to the moving average. This is another one. So maybe at first price created this one. When this one start, don't worry about maybe it didn't, this leg didn't go below this or something. That doesn't matter. As long as it looks like a high with the moving average, it is considered one. So now price created this high, price came back but didn't break this high, created another high. You move your line to here, you extend it to the future. So let's pretend price just created lower, this was a lower high, this was a lower high. So price was around there. Then price came and break this high, this particular high. Once you have a break of the high like that, the next thing you do is you plot a box like what we did on the 1 hour chart. Plot a box because we are trying to get a lower time frame entry. So exactly what you did on the 1 hour chart, that you price went somewhere, came back, you plotted a box or a zone you expected price to come back to. It's the same thing we are doing now. So we simply plot, we look for which candle was the last candle, the last protected candle before the breakout. It is this one, not this one, because this one is sharing the same candle breakout with the high, the lower high. The one that doesn't share the same candle break, the candle that broke this black, that closed above it, is the same candle that broke above this lower high. You can't use that one. You need a neutral candle. That is the next one. That is the protected candle. So you extend it to the future. Let's pretend as if as at the time we had this break above this lower high, price was just here. And you pull this, you'll be amazed that price is going to come back here. Price is going to come back here. And if price is going to go lower, price is not going to go lower than this point. The thing is, this is the particular place price is supposed to go to, but you know forex, at times they hunt your stop losses. So once you put your stop here, your entries here, you make sure you put your stop losses at, this is a 5 minutes chart, so you can just put your stop loss somewhere decent enough. So the thing is, most times when I give strategies like that, I tell people do series of back tests. So once you've done that, you'll be able to figure out where you will put your stop loss. Because I can't say put your stop loss here. I've seen different scenarios where the price comes back to on stop losses. For me, in this kind of strategy, I'm very sure of the strategy. I'll just put my stop loss below this point. It may seem very big, but it has saved me a lot of times. Or when price gets here, I'll see another lower time frame entry on the 1 minute chart. It might seem tedious, but it has saved me a lot. So look at what happened. Price tagged us in, did its thing, and look at what they did. Look at what they did. That is what I was saying earlier. They came after our stop losses. They knew probably your stop loss is here. They came after it. This wasn't necessary. This wasn't any news. It was just a stop loss hunt. That is what happens when they know you are right. At times they try to take you out. They did it. They left. They came back. Let me extend it so that you see something. Let's correct it on that. Let's correct it on that black handle. I'm just trying to show you what happens to make you know this strategy is right. They went after our stop loss. They took us out. They now came back into the game, tapped on that very spot because it is the right space. That is the sniper place for you to pull the trigger. They moved in profit again. They took us out again. Look at what happened. Immediately they took us out, and they started going. So that makes you know this strategy is 100% accurate. So the only problem you may have with this strategy is once in a while they do things like this, which happens on volatile pairs like GBP, USD, and gold. At times it happens here too. And most times when they do things like this, at times it is because maybe the profit potential is very high. Maybe they want to shed the load of people who the winning percentage of people, so they will just push some people out of the trade. So let's just say, okay, now we got tagged in. Let's go and look at the profit potential. Look at it. So now imagine you placed your stop at the low of that place. Look at the profit potential. Look at it. Look at it. So now this has finished Let's remove the moving average. We don't need the moving average again. So let's put the envelope back. So that was the lower time frame entry, and look at the profit potential for that. Look at it. Price went all the way up here before another movement happened. So that means you could have been in profit from somewhere here to here. That's a very good profit potential. Before we leave, there are two entry strategies I wanted to show you guys. Okay, so remember we had our lower low below, we had our higher high above, then we marked our box, the same thing we did on the lower time frame. So we said anything from the beginning of this box to the end of this place, that is where we expect price to pull back to. Not that price will get here, you think, let me just pull the trigger. That is why I said once price comes back to our box, starting from the beginning of the box, that is why you can put a box or you can put a line to mark once price comes back to anywhere. Once price touches this place, you are diving down to a lower time frame. So let's do it again, because I want to show you another strategy for this before we look at more examples. So we go to our 5 minutes chart. So now we are on the 5 minutes chart. Let's remove like I said earlier, remove the envelope or hide it. If you are able to hide it, I think hiding is better than removing it. So you hide it. This is where the zigzag comes into play. I hope you still remember the settings. So you fix your zigzag indicator. We are on a lower time frame now. We are seeking lower time frame entry strategy for entry confirmation for this particular strategy. So now look at what happens. It's almost something similar to what the moving average gave us, but the zigzag indicator gave us a cleaner look. So like I said earlier, this was a high according to the zigzag indicator. All this may not have happened then. Let's just pretend the price was just still here. So we put this above. So price came, couldn't break the high. Price created another high. Then you place this one. You place it on the lowest high. Some will argue that zigzag indicator reprint. The thing is, by the time zigzag indicator makes use of a particular calculation to create these lines. So by the time you have a break above and a higher high close above the lowest high, and price decides to pull back, zigzag indicator would have concluded its calculation, so it won't reprint anything again. So that is why I'm giving you this as it has been tested and confirmed several times. You can use it for your lower time frame entry confirmation. So whatever any high it creates for you, that is the high you pick. Don't mind if the high is small, is big. So far it is, if you look at it properly, so far it is the lowest high. This strategy is a buy model. So opposite of this is what you will use for your sell model. So now according to this, we have a higher high break above the lowest high. So definitely price would come back to where we spotted that time. So you can either use a moving average when you come down to the lower time frame to select the break of the lowest high before your entry, or you can use a zigzag indicator. Our advice, you use a zigzag indicator because it is very clear. You can see it very clearly. So assuming after this lower high, price came here, create another lower high, it would have been this lower high somewhere here we will use. But for this, we only got this one. This was the lowest high that got broken. And once it got broken, look at what price did. Price came here. price came in. And already, look at the funny thing. Price came here, broke this one. Let me show you this. This is funny. This is why I prefer a zigzag indicator for lower time entries. Broke this here. This is its lower high here. Price broke this, created a higher high, confirming this place as the entry point. It broke it and pulled back. It was supposed to leave before they now did this stupid stunt they used to do, before they now came for our stop losses. It came back in, tapped on that spot, our secured spot, our sweet spot, tapped on it to show this is the spot. Tried to move again, and they did what? Haunted our stops again. And immediately they pushed a lot of people out. Look at what they did. Some people will argue this is news. This is no news, my brothers and sisters. This is no news. This is intentional. This is manipulations just to kick people out because of the potential, the profit potential. So now that we've seen that, we can remove this. We can remove the zigzag. You only need the moving average and the zigzag indicator when you want to dive down to a lower time frame to select and to choose your lower time frame entries and confirmations to seek those. So go back to the 1 hour chart. So you see, they kicked us out, and look at what price did. And one thing I like about this is you can use this envelope to monitor your profits. You don't need to get out of the trade until you have a lower low close below the red band. Because once you have a lower low close below the red band, that means the price is going into a pullback phase, and you don't need to sit down and wait and watch your profits disappear. So once you start seeing price do a lower low under the red band, get out of the trade, close your profits. But imagine what you would have gotten if you enter the trade here. You pull the trigger here and look at the potentials. This is nice. So let's check out another example. So look at this. This was an expansion. This is a pullback. This meets the criteria of my own pullback. That is why I kept this there. There is no trade I will ever take without meeting my conditions for pullback. So this meets my condition for pullback, and at the same time I had a higher high. This is a sell model. A higher high close above the blue line. So what would I do? Once I have that, I'll let price create a lower low under the red band. Once it does that, I'll mark the last red candle before that breakout, which is this. Black candle broke the red band. I'll mark the opposing candle, which is the red, which is this. I'll mark it. And once I mark it, I'm not expecting price to come here alone. I'm expecting price to come here and change and sell between here and the last point here. That is what I'm saying is this. Once you pick your spots from the last candle before the breakout, you can expand it like this to the last point. That is your candle. That's your opposing candle before the breakout candle to the last point. That is the zone you expect price to come to for a sell. So let's see if price actually did that. Price came there, and price did what? Sold off. You see? Look at this one again. Look at that line I used to put there. Don't mind this. This one is just for me to spot, because I do teach people on WhatsApp and Telegram. So we've shared this example before I did this video. So that's why you can see it's marked already. So this is my confirmation that is of a pullback. I won't do anything without that. So I have my pullback confirmation, personal pullback. There's a pullback for a strategy, a specific strategy. Then I have my own personal pullback. So that makes 2 points I used to look for. If I don't get it, if I don't get one of the two, I don't do anything. So now I have a higher high close above. You need to have a breakout of the blue band, a breakout and a close, higher high close. Once you have that, you are good. You have that, you are good. Then you do what? You wait for price to do a lower low close below the red. Don't bother about how long it's becoming. Price is coming back to where you need price to come to. That is the thing I love about this strategy. If it doesn't come back, leave that pullback alone. Look at the next pullback. Try to scrutinize that one, see if it's going to work. It's just as simple as that. So the breakout candle is this. Which red was before the breakout candle? Which protected red? This one. That's the one we marked here. Let me zoom out so you see it. This is our breakout candle. Which opposing candle was the last one? This red. That is where I have my box. And I said earlier, you extend it to the last point. So that creates a zone where you need price to come to. So let's see if it actually came back there. Look at how long it was before it came there. You won't be in a hurry, you wait for it. Price came back there. And what happened? That's why I said a box. That it is, you're not interested in that box, you're interested in that zone. And what will price do? Price sold off. Look at this sell off. This is crazy. Look at this sell off. Look at this. That's why I said, please try to always stay in the trade. Catch all the pips. Don't waste the pips. Catch all the pips, as many pips as you can get. Wait in the trade until you have a higher high close against you. You know you're selling. So if you have a higher high close above the blue, you are sure that is a pullback. Here we have another example here. Look at this. Expansion, pullback. And let's see. Did I put that? Yeah. This, did it? Yes, it did. Maybe while I was doing some things, I mistakenly hit it and it's removed. What I was saying earlier, my own pullback, then the second pullback, that is just my own pullback. I've been saying this since. Lower low formed to confirm a pullback, higher high above. You wait for a higher high. You mark your black before the break and you expand it to the lowest point that price reached on that pullback. That is your zone. So what you wait for is price to come back to that zone. You go down to a lower time frame, seek your lower time frame entry confirmations and you buy. And look at what price did. Look at the profit potential. And once you have a lower low here, you get out of the trade, you close your profit. That's simple. Let's see another one. See another one. This is it. Okay, yep. Here confirms the highest low. This is the highest low, which was broken here. If you pull this to here, it was taken up by this lower low, so it meets the condition, high condition of a pullback. Then apart from this one, I have a lower low close, and price never broke above the blue line until here. Price did a higher high close above the blue line, and I said what? Mark the black, and price came back close to it. Price didn't touch it. That's just one of the manipulations. And price did what? But assuming you went to a lower time frame, probably, I'm not too sure with what I see here, but I think it's possible you might have gotten a lower time frame confirmation entry on a 1 minute chart. It won't be on a 5. This won't show on a 5 minute. But just goes to show you this strategy is crazy. Look at it. Let's check another one. Okay, this is a pullback. Lowest, that's the lowest high was broken. Higher high created That's according to my own pullback principle. It meets that condition, then it created a higher high. If this doesn't, don't well, just that is you need to go and watch that video. So you once I have this, I'm very sure of one thing: profit. So now there's a break below. As once you have a higher high, well, the thing is, it is not as if you need a once you have a higher high above, once you have a breakout candle, a black, it is not necessary for this red that confirms it as a high to be outside. Once you, this is what I'm saying, because I know some people will get confused with that too. This is what I'm saying. Because at times one has to be very careful with teaching you. Some of us are very funny. They just come up with certain things you didn't mention, and they start saying your strategy is fake. Is this? Don't let me say it. I'll get some people arrested here. Just playing. They even create funny things. So according to this, if you have a higher high close, once you have a breakout candle above the blue line, the confirming candle that confirms the higher high is not necessarily it doesn't have to be outside the blue above the blue band. It is the first candle that breaks out that has to be outside. You know the way higher high is. So this breaks out a black, a red, confirming a higher high. I hope you get that point. So this is our pullback. Price broke out here. The last red, the last protected red. This wasn't the last protected. This was the one. The last protected red. And I said what? You move once you have that candle. That's your candle before the breakout. That protected candle. You expand it. Like I've been saying, you expand it. That is the zone you expect price to come to. Price, there has to be a lower low. Not that you look at this and say price came back. The price hasn't even confirmed the lower low yet here. There has to be a lower low. The lower low was confirmed here. Price went down, pulled back here. It was here that price came back to that zone. And if you dive down to a lower time frame, like 15 minutes, without even going there, I've seen it. It created a low, that is, price confirmed it here and sold off. And look at the sell-off. So let's pick another strategy, so let's go for another example. Okay, this pullback confirmed by my own conditions, then higher high. So we have, it never broke below and created a lower low until it came here. And at times in forex they use 3 consecutive candles. I've mentioned it severally in my videos. So we have the 3 consecutive candles in place of the lower low candle. They use it a lot. So now we have that one. After that one, so once we have candles like this, we can't really pinpoint where the last red before the black is, because we have too many blacks. So what we just do is, once price comes above the blue line, we seek a lower time frame entry. And what happened? Look at it. Let's go for another example. Look at it here too. This is where my own pullback confirmation is. It happened, that is a break of, this is the last low according to the expansion phase. Expansion coming down, last lower high was breaking, was taken out, the higher high formed above it, so that confirms my own pullback. So now price didn't break below the red until here. There was a break, a lower low close, and price went. We marked the black at the red, the opposing candle. Black broke it, red was the opposing candle. We marked the red, and normally you can expand to the highest or even as high as this. So price came back to that same spot. At this spot, you dive down to a lower time frame and sell off. Didn't sell that much, but at least you could have, gotten some pips there. That strategy is everywhere. That strategy works almost everywhere. Nothing is 100%, but at least this strategy works very, very well. This is where I'll be stopping for today. It has been a wonderful experience showing you guys this. Ask questions, give suggestions, hit the notification button so you get notified once I have something very nice like this for you. So please subscribe. For some of us who are yet to subscribe, please subscribe and like. On this note, I'll say please have a very, very lovely day. Till the next time we meet. Ciao.